Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look at the gold market. Well guys, as you know, in the recent weeks, our major concern stand above upside retracement that we now see on the gold market. And the major riddle here was where this retracement will stop and where it will finish. And for a long time we can't get any clear pattern that could suggest how we should treat this retracement and where we should search the possibility for either going long or maybe it's time to think about taking the short position. And right now, on the past week, finally we've got some clarification. At least the situation has become a bit more transparent than it was previously. First of all, I would like to say that recent CFTC report and the speedier data doesn't show any signs of drastic shift in the sentiment. Yes, bearish positions have been closed a couple of weeks ago, but no money has come into the long positions. On last week, the balance between the bearish and bullish speculative positions mostly remains the same. We could say just there was just a shy increase of the longs and shy decrease of the shorts, but in general that was really very small change, and mostly we said that we would not see any drastic shift in the sentiment, that we can't say that market really has turned to the bullish sentiment. We see significant increasing of the net long position and so on. On the speedier front, despite on some positive action on Friday, still reports on the outflow on the previous week for the 3 tons. It's not really big outflow, but still this is outflow, and that just makes us think that this upward action is really just a retracement, and we can't rely on it. It's really fragile action, and we should think twice before taking long position if you would like to do this. Simultaneously, guys, finally we've got the pattern. Today we mostly will be interested in the weekly chart and the intraday charts, because daily chart is not very interesting for us right now. And this pattern is the weekly bearish stop grabber that we have here. As you can see on the weekly chart, we have the bearish grabber that suggests the taking out of these lows. And that lows is 11.30. The target of the potential pattern stands right here. It's 11 even, approximately 10.95. So that's simultaneously the target of this ABCD pattern, most recent ABCD, and also, as you can see, 127 extension of this swing and target of this butterfly. Also, guys, probably if you will measure this ABC top D pattern, you will get approximately the same numbers. What I would like to say is that we have the pattern on the weekly chart. As we know, the higher the time frame chart is, the stronger the patterns that it forms. And it means that weekly chart overrules what we have on the daily and on the intraday charts. That's why our thought is that probably we should be ready for taking the short position, because we do not see any bullish supports from the sentiment data. We do not see real purchases. We have the bearish grabber on the weekly chart. We have the bearish trend on the weekly chart. And we have the bearish dynamic pressure on the monthly chart. In such circumstances, we even can't count on the possible shy upward continuation on the daily. So on the daily chart, I will show you guys, but it's really not very important. We didn't get any grabbers that we have suggested to get. So as you can see here, we have nice upward action on the daily chart, but this is not the grabber, and that action doesn't suggest the taking out of the stop. And probably taking into consideration the pattern on the weekly, we should treat this upward action as just the opportunity, as just the assistance for the possible taking short position at the better place. Now, what we will be watching for in the beginning of the next week. For that purpose, we need the hourly chart. On the hourly chart, we see nice thrust down That was, if you remember, FIB support on the hourly chart, 618 support we have discussed. And you can see that the reaction on this support has taken the shape of the double bottom pattern. You can see this first bottom, second upward breakout. The classical target of the double bottom is distance between the neckline and the bottom counted to the upside in the direction of the breakout. Or I often use the 200 twice extension of this A, B, C bottom pattern. 200% extension, or twice just distance. Okay, this target stands in agreement with the 618 fib resistance, 1220 area. Sorry, 1212 area. Well, and that's some sort of agreement. Also, this area will be very close to the weekly pivot points. You can see the market will open at the weekly pivot point. So we suggest that this is probably an area that we should watch for a possible short entry, because the invalidation point of the bearish grabber on the weekly chart stands right here. That's the 1224 top, and it agrees with the new weekly pivot resistance one. So if market will move above it and taken out of this top, that will lead could lead to the further upward continuation. But until this will happen, the bearish grabber on the weekly will be valid, and it has really extended target. So on the weekly chart, this is 1130. For daily and intraday charts, that's really very attractive risk-reward ratio. So that's our trading plan right now. Right now, we will be working with the weekly stop grabber, and one way or another, we will lead it to some final. So either it will fail, the market will continue to move higher, or we will join this party on the short side of the market and it will start to work. That will be really pretty nice downward action. So guys, if you also would like to take the short position, you should care about your trading size, volume size of your position, because as you can see, the distance is not really small. It's approximately 12 bucks per contract. That's not really very clear, very close stop. That's why adjust your position corresponding with that, and do not take the too significant loss in your account. So that's all for gold market. Let's see how this action will turn on the next week.